Creamer Media's Mining Weekly is speaking to Neil Pretorius, the CEO of DRDGold, which has just produced a fine set of results. Neil, what should be the big takeaways from your report over the 6 months?
The thing that we are the most grateful for is the fact that we were in a position to take advantage of the much higher gold price. The business had been set up over many, many years, focusing on technology, focusing on mechanization. And I think a lot of these systems, which were designed and implemented with risk in general in mind, in fact, came through and enabled us to actually deliver some very good volumes. So the plant's been set up really well. The volume throughput was there. And as a consequence, we were in a position to take full advantage of this much higher gold price. And as a consequence, I think you see that in the numbers, in the financial numbers. We've never seen numbers like this. I mean, the cash operating profit, 1.4 billion, earnings of 950 million. These are numbers over a 6-month period. So it's really been a month or a period rather, where a lot of things went right for us.
And do you see it having legs?
The outlook for gold is really good. There's a lot of debt that's gone into the markets to stimulate spending and to support consumerism. Before COVID, now following COVID, these holes hadn't been plugged fully, and I think a lot of additional gaps will now start opening up. The full impact, the devastation of COVID on economies globally, I don't think we've fully seen that, and debt levels are going to go up even further, and there just seems to be no putting the brakes on the rate at which money is being printed and pushed into international economies. So at some point or another, it's got to stop. If it's true value that you would ultimately have to retreat back into, when the easy gains that are being picked up in the markets now, when that's something of the past and you have to go back to fundamental and true value, I think that'll be very good for gold. So yes, perception's probably going to push it down a little bit, because buying gold is like paying insurance, and nobody likes to do that. But ultimately, you don't really have much of a choice, and if there's not enough of it going around, it could be very, very good for the gold price.
What are the short-term opportunities of you increasing output?
Well, we're focusing on making sure that we optimize our resource. We obviously want to make sure that we have sufficient plant space, that we have the right infrastructure in place to give us access to our resource. A lot of time and effort's going into planning additional deposition space. In terms of our second phase of the Far West Gold operations, if this could be the new, if gold's rebased at, let's say, north of $1,800, we might be a little bit more ambitious in terms of just the size of our project. At the moment, we've been conservative in looking at it from the perspective of what do we need in order to unlock our own resource, which is just north of 200 million tons. That we may have to go onto the infrastructure that we're planning for that project. But we might be in a position to build infrastructure, plant and deposition infrastructure capable of bringing about a regional consolidation, enough space for everybody's tailings in that area, which is really what I think we would want to achieve from an environmental perspective. There are a lot of those tailings that are simply built in the wrong place. They're over dolomitic features and pose a risk to underground aquifers, so they need to be moved. And I think this could be, we could play a role in that regard if the gold price stays north of current levels. So yes, definitely we're looking at ways and means of further increasing our resilience. So when the cycle does turn, that we could see it through, that we don't have to cut back, that we can retain crucial skills, and that we can sustain infrastructure. But at the same time, also positioning ourselves in such a way that if it does take off further, that we can once again take full advantage of the much higher gold price.
That was Creamer Media's Mining Weekly, speaking to Neil Pretorius, the CEO of DRDGold.